In this video, we'll be going over IRS Schedule 2, additional taxes. So as with most schedules, this is an accompaniment to your Form 1040, 1040 SR, 1040 NR. And this is the part that helps calculate other taxes that don't have a home elsewhere on your Form 1040. So we'll go through some of these, specifically the changes that have happened in the past year or two. We'll kind of like just a quick glance of your Form 1040. Here's income. Here is tax and credits. And the parts of Schedule 2 that will go into here will be a number that we put into line 17 and then a number that we put into line 23. And we'll go into a little bit of detail to provide the background on why Schedule 2 has two different lines on your Form 1040. But that's our goal, is to go through the Schedule 2 so we can not necessarily do the math here, but to kind of walk through where each of these additional taxes comes from and what forms you should be looking for if these situations apply to you. So a couple of things. First, the numbers here are just, they're the same dollar amount. Obviously, this is not a realistic tax scenario. The focus of this video is really to kind of share some background on where each of the line items are calculated and where you would get these numbers from. So for the simplicity in this video, I've just put $1,000 dollar items for each line. In most circumstances, probably virtually every single tax return, Schedule 2 would look nothing at all like this. And for most taxpayers, you're probably not even going to use all the lines. The second part is that our focus is to go over the information that comes from certain forms, and we'll put links in the show notes to all the articles and videos that we've created for the forms that are currently available. As we go through this, there are a couple of forms where there's a tax year 2024 update to the form that makes it look completely different from the current version, and with particular reference to IRS Form 4255, which is a completely different form from prior years. That the final version isn't out yet. So at the time of this recording, we'll walk through these forms. I'll show you what IRS Form 4255 looks like. For the vast majority of taxpayers, it won't apply, and we'll walk through why. So let's go ahead and start with the taxpayer information at the top of the form. If you're using tax software, most likely this is going to be automated from your Form 1040. And if you do this by hand, just make sure that it matches the rest of your Form 1040. Starting with Part 1, all the additions to tax. So this used to be two lines. It used to be just the excess advanced premium tax credit repayment and then alternative minimum tax. So it used to be line 1, line 2, and that was pretty straightforward. Now there's a bunch of different taxes. We still have line 1A, which is the excess advanced premium tax credit repayment. So for those of you who use the healthcare exchange, you may be eligible for a premium tax credit to help offset part or all of the costs of your premiums. However, you may also be eligible for an advance payment. However, when you receive an advance payment, you do have to complete IRS Form 8962. That's the premium tax credit calculation form to make sure that you properly calculate the amount of tax credit you should have received. And then if you were overpaid, that would be considered in addition to your tax. You're going to pay that back. And that dollar amount goes right here in line 1A. Lines 1B and 1C have to do with the clean vehicle credit form. It used to go under a different name, like the qualified plug-in electric vehicle credit, but the IRS has changed that to the clean vehicle credit. Line 1B pertains to the repayment of any clean vehicle credit. Basically, if you bought a clean vehicle, you're eligible for a payment, but you have to keep it for a certain period of time, or under certain circumstances, if you transfer it to a registered dealer, you may have to repay part or all of that credit under certain circumstances. So to calculate that, you would complete IRS Form 8936. That's the clean vehicle credit form. So for a new vehicle that you transferred to a registered dealer, you would complete Part 2 of Schedule A, and then you would enter that dollar amount here. And then Part 4 has to do with previously owned clean vehicles that you transferred to a registered dealer, and that would go here in line 1C. So lines 1D, 1E, and 1F have to do with the form called IRS Form 4255. This is a certain credit recapture, excess payments, and penalties. As you can see here, as of January 8th, which was about a week ago at the time of this recording, this is still in draft form at the Treasury Department or the IRS. I would expect that this is going to be released in the relatively near future, so I'm going to take the liberty of walking through this form with an understanding that there's probably not a lot of substantive change that's going to happen. Certainly, if there are any changes, it's probably not going to impact the quality of this video. I'll keep an eye on it and report back accordingly if things have changed. So there are a couple of concepts here that really didn't exist before this form was released or revised. Recapture of what's known as EPE. That would be the net elective payment election. And that really sounds like it comes from the Department of Redundancy Department, but that's a term. And if you have to complete IRS Form 4255, line 2A, column L, that would pertain to IRS Form 8933. That is the carbon oxide sequestration credit, and you would just carry over the dollar amount from column L, which is actually on page 2 of this form. So right here. So again, not pertaining to the vast majority of taxpayers. Line 1E represents excessive payments from the same form, and this is the column N number. So lines 1A, 1D, 1C, and 2A. So column N happens to be this amount right here, and 1A is IRS Form 7207. That's the Advanced Manufacturing Production Credit. 1C is the Clean Hydrogen Production Credit. Line 1D is IRS Form 3468. That's the investment credit, and then line 2A is the IRS Form 8933 carbon oxide sequestration credit. To be honest, I have not done tax articles or videos on any of those forms, so if any of those pertain to your situation, put a comment up and I'll see if I can add that to my editorial calendar. But what you would do is you would enter the total dollar amount here, and then you would check the applicable boxes. Line 1F is a 20% EP from the same form. You would check the same applicable box, and this time it's coming from column O. So if you owe an excess of payment, you would enter the portion of the payment that's not in column N, plus any 20% excess of payment that you owe. So clearly, the details of that reporting is beyond the scope of this video, but that's how you would report that. Line 1A, has other additions to tax. These are more kind of arcane additions, but a recapture of the alternative fuel vehicle refueling property credit. That would be IRS Form 8911. There are a couple of other taxes related to IRS Form 4255. So we do cover, we do spell that out in a little bit more detail in our article. You can check that out. I'll put a link in the show notes to both the article and all the articles and videos we've produced on the tax forms and schedules that we mention here, to the extent that I've actually done them. So in line 1Z, we're going to add all of these together. We get $6,000. Line 2 remains unchanged from prior years. This is alternative minimum tax. There's a worksheet in the Schedule 2 instructions that you can go through to determine whether you need to file IRS Form 6251. You can also search in our YouTube channel for a walkthrough of that worksheet. That worksheet is from a prior tax year, but having looked at the schedule instructions, there's not a lot of substantive difference. So there may be some adjustments for the 2024 tax year versus prior tax years. But other than that, the mechanics of that worksheet are very similar. So you can use the worksheet in the form instructions, and then if you need to walk through it, you can go to the video. So we add those two up and we get $7,000. We're going to add this on line 17 of your Form 1040. So that would be right here. And again, this used to be just as simple as the excess advance premium tax credit and the alternative minimum tax. You would add those up and put them here. But with the additional taxes that we mentioned from all of the investment credits, you would need to do that. Now, this is the part of the tax liability that you can take a tax credit. You can reduce all of this down, any additional credits from Schedule 3. You can reduce that down to 0, but you can't reduce it below 0. So let's imagine that you took, let's say you had your regular tax liability was $10,000. And then we add the $7,000 from Schedule 2. So we'll combine that and we get $17,000 of tax. Let's just say that you had $2,000 of credit from Schedule 8812. And then let's just say that you had another $2,000 of non-refundable tax credit from Schedule 3. So you would add those two together, and then you would subtract this from $17,000. And we get $13,000. So all well and good, right? I'm going to zero out some of these items so we can focus on the fields that really are important. So let's imagine that this total was $3,000 and we have $4,000 of credit. You can only enter, you can't reduce your tax liability to 0, below 0. So you can take this $1,000, you can reduce your tax bill to 0, but not below that. Now, all of the other taxes that we're about to go through in line 2 are added back to the amount on line 22. And the purpose of this is so that basically this $1,000 extra doesn't get applied to all of these other taxes that come from line 21 of your Schedule 2. So there are two reporting lines from Schedule 2 that go directly to your Form 1040. The line 17 amount, you're able to use non-refundable tax credits that are reported on either Schedule 8812 or any amounts from Schedule 3. You can reduce that to 0, but then you're going to add back everything that we're calculating in Part 2. And that will not be reduced by any of those amounts, like the child tax credit or those amounts reported from line 8 on your Schedule 3. So let's go through some of these other additional taxes, other taxes on Part 2. So there's quite a few of them. Again, we'll go over them in light detail. If there are any taxes that are kind of long tail, I'll kind of let you know, and we'll kind of gloss over them, but we're not going to spend a lot of detail on any particular one. So self-employment tax, you would attach a copy of your Schedule SE to your tax return. So the important thing is electronically, your tax software is going to pick up on all this. If you're doing this manually, whether you file that electronically or whether you mail in your tax return, like some relatives that I still know, you would need to make sure that you double check your return to make sure that those forms or schedules are attached. So self-employment tax, you attach Schedule SE. For any Social Security and Medicare tax that was calculated on unreported tip income, that would be calculated on IRS Form 4137. So I'm not exactly sure how the tip economy works. My assumption is that IRS Form 4137 is probably the least filed tax form I can think of. I'm not sure I know any particular person that works for tip income that's just running right out there trying to figure out how to report it for Social Security purposes. But if you are, that's the tax form that you would use, IRS Form 4137. Uncollected Social Security and Medicare tax on wages. So that's a different tax form. That would be IRS Form 8919. And specifically, this is what you would do if for some reason you're an employee and your employer did not withhold Social Security and Medicare tax from your wages. Then you would complete that form, attach it here. So your total amount of Social Security, I actually did this math wrong, so it's going to affect the rest of the calculation. But you would add these two and we get $2,000. So basically, Social Security and Medicare tax that wasn't otherwise reported. We're going to put that here. Line 8 has to do with any additional taxes on IRAs or tax favored accounts. So specifically, this has to do with early distributions or excess contributions or taxable distribution from an education savings account, from a college 529 plan or an ABLE account, or if you did not take your required minimum distribution from your IRA, all of those are calculated on IRS Form 5329. So there may be situations where you don't have to file IRS Form 5329. So if the only item that applies is an early distribution and the distribution code 1 is correctly shown in box 7 of your Form 1099-R, then you would not need to file IRS Form 5329, and you can check that box here. In most circumstances, circumstances that where that's not reported correctly, or if it's a different transaction that involves an additional tax, then you would leave that blank. Household employment taxes. So if you're a household employer and you owe taxes for an employee, then you would enter the dollar amount here from your Schedule H, and you would attach Schedule H. Repayment of the first-time homebuyer credit. So this is a credit that goes back to 2008. Basically, this is the tax credit that has a 15-year repayment period for homes that were purchased in 2008. That credit would have started with your 2010 tax return. It ends with the 2024 tax return. So I anticipate that this will probably fall off after the 2024 tax season. But if you're still repaying that, then you would put that here. Additional Medicare tax that applies to people that make excess income, for married filing jointly or most other tax. For married filing jointly, that would be 250,000. For married filing separately, 125,000, and for all other statuses, 200,000. And then that's basically very similar whether you're paying into Medicare or the railroad retirement compensation. They're kind of like parallel programs. So you would need to complete IRS Form 8959 for that, and you would enter that dollar amount here. The net investment income tax. This is for investment income on similar income thresholds as the additional Medicare tax, and that would be IRS Form 8960. You'll put that dollar amount here. Line 13 has to do with uncollected Social Security and Medicare or RRTA tax on tips or group term life insurance. You would find this on your Form W-2 in box 12, and this would either have code A and B or M and N, depending on whether it's Social Security or Medicare tax, whether it's tips or group life insurance. Let's see, line 14, this is the interest on tax due on installment income from the sale of certain residential lots and timeshares. Probably does not apply to the vast majority of taxpayers, but if it does, you probably are aware of that. Line 15, the interest on the deferred tax on gain of certain installment sales with a price of over 150,000. Again, probably not impacting a whole lot of taxpayers. The recapture of the low income housing credit. If you do complete IRS Form 8611, you would enter the dollar amount from line 14 here. Now, line 17 and all of these different lines have, well, let's just say that these are relatively long tail taxes. So line 17A is the recapture of tax credits, either from IRS Form 4255, the new markets credit, employer provided child care facilities. So you would enter the type of credit. So let's say that this was from the new markets credit. And this is Form 8974, or sorry, 8874, and then you would enter $1,000. So line 17B, if you sold your home in the tax year and it was financed through a federal mortgage subsidy, then you may have to recapture that tax, and you would do that on IRS Form 8828. So that would be here. If you owe an additional tax on HSA distributions, that would be reported, or you would be calculating that on IRS Form 8889. You would put that additional tax here. Line 17D would be an additional tax for your HSA because you did not remain an eligible individual during the testing period. So that amount would be in Part 3 of your Form 8889, whereas the line 17C is from Part 2. Lines 17E and 17F are both from IRS Form 8853. This is the additional tax on Archer MSA distributions, which you would find on line 9B of your Form 8853. Line 17F would be from line 13B of your Form 8853. Line 17G, recapture of a charitable contribution deduction related to a fractional interest in tangible personal property. There's not a form that's related to that, but IRS Publication 526, which covers charitable contributions, goes into detail about that. I don't think I've met a taxpayer where that applies to their situation. Line 17H, this would be any additional tax on income you received on a non-qualified deferred compensation plan. This would be shown in box 12 of your Form W-2 with the code of Z, or on your Form 1099 MISC in box 15. Compensation from a non-qualified deferred compensation plan, a 457 plan. This would be kind of similar, except this except the form instructions direct you to actual section 457A of the Internal Revenue Code for additional guidance. But basically, if you receive compensation from a non-qualified deferred comp plan, if it would have been includable in an earlier year, except they weren't able to determine that amount until 2024, then you would enter that additional tax. And that would be 20% of the amount that was required, plus any interest amount, again, determined under the code section. So that code section has a specific way to calculate interest on the tax that you would have reported and paid in a prior year. Line 17J, this is for section 72M, excess benefits tax. Line 17K, golden parachute payments. This would be reported on your W-2 with a code K in box 12. Most people that I know have only heard of golden parachutes. I know very few people that have actually received golden parachute payments. Line 17L would be a tax on the accumulation of distribution of trusts. That would be reported on IRS Form 4970. Line 17M is the excise tax on insider stock compensation from an expatriated corporation. So if you're familiar with that, great. You probably know more about this topic than I do, but you would take that calculation on the excise tax and report that here. Line 17N is look back interest under either section 167G or section 460B, and that would be reported on either IRS Form 8697 or 8866. Line 17O is the tax on non-effectively connected income for any part of the year that you were a non-resident alien from your Form 1040-NR. Line 17P would be interest from IRS Form 8621, line 16F. That has to do with distributions from or dispositions of stock of a Section 1291 fund. And finally, 17Q, well, not finally, 17Q is interest amounts reported on Form 8621 in line 24. Other taxes, we cover other taxes in line 17Z, such as the Form 8978 adjustment, which requires an adjustment worksheet calculation. So if you need a walkthrough of that worksheet, you can find that in our channel. So any other taxes, you would list the type and the amount. So it would be something like that. And then I think I added $1,000 back there. So you would total, not there. So you would total lines 17A through 17Z. I think there were 18 lines there, so we put that there. The recapture of net EPE from IRS Form 4255, line 1D. If that applies to you, you would put that here. The line 20 contains the section 965 net tax liability installment from IRS Form 965A. The instructions really don't have a whole lot of guidance on where this goes, and it doesn't really look all that clear when I look at the form itself. So basically, yep, there we go. So the net liability installment payment. It looks like it could be from part 1. I haven't dug deep into this form, so I wouldn't be able to tell you offhand. But if that applies to you, let me know, and we'll see if we can work through that together. So now you're going to add lines 4, 7 through 16, 18, and 19. And so we get, so line 4, not including this, but line 4, and then 7 through 16. So that's 3, 4, 5, 6, 7, 8, 9, 10, 11 with the 12. So that's, let's call that $31,000. So this is the part that would go on your form 1040 here. So even if you had like $1 zillion of credits here, let's just say you had $40,000 worth of credits, that reduces all of this well below, like below 0, but you can only take it down to 0. And then you're going to add back all of the part 2 taxes, and you still will have $31,000 of taxes. So that's, that's the rationale for the taxes being listed in the order they are, is that all of these taxes up here can be reduced to 0 through the non-refundable credits on Schedule 3 or on Schedule 8812. All of these, for one reason or another, cannot be reduced below or they're not part of that. They're applied after you reduce that tax down to 0. So I think that covers Schedule 2 and all of the different taxes that go into this. As I mentioned, we'll put links in the show notes to the articles and videos that we've created about certain tax forms. This might be the first tax form video or that I've created in a while where I don't feel that I've covered every single tax form mentioned here in an article or a video. So if there's one that's of particular interest to you, please hit me up in the comments section. I'll add it to my editorial calendar. My focus for tax season is getting through all the forms that are regularly updated. But if there's a special request, I'll see what I can do to get that tax form included. So if you like our articles, please subscribe to our newsletter. There's a link in the show notes. If you like our YouTube videos, please subscribe to our channel. You can search within the playlist or the channel itself for any particular topics, worksheet walkthroughs, for example. But if there isn't one that you see, or if there's one that is dated that I haven't updated yet, please let me know, and I'll see if I can what I can do to help you out. So as I mentioned, if you have any questions or comments, or if there's anything that I can do for a future video, please hit me up in the comments section. Thank you very much and have a great day.